You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is David Smith. He's the senior analyst for the Morgan Report, which you can find online at silver-investor.com. Welcome to the show, David.
Yes, Jim, we're living in very interesting times.
Right now, we're going to talk about, we saw, gold and silver were progressing pretty nicely, and then there's been a substantial drop. So today's topic, how to remain solid when the precious metals market is melting down.
Well, we've had a kind of a ongoing Chinese water torture for almost 2 years now, with prices sagging and going sideways and sagging some more, and now they're sagging in kind of a more consistent way. They're going down pretty sharply, especially the mining stocks, and a lot of people are getting concerned and perhaps even panicking. And I would argue that this is a good time to really test your mettle, so to speak, by working at your strategy and figuring out what it is you really want to accomplish and if you still want to be in the game. And so I think before a person does anything, they have to ask themselves this core question: do you still believe that the precious metals are in a bull run, a secular bull market? If you don't, then you might as well just cash in your chips and leave, and there's nothing wrong with that. But if you still think it is, then you need to persevere, and you need to really get clear on what it is you're going to do and how you're going to approach it. And then if you're going to do that, I'd track back to what we talked about a couple times in the past, which I think is a fundamental behavior that really works, and that is to follow the Boyd cycle of the 4 steps, where you first observe what's going on, so you see what's happened in the last few weeks in the metal, and you also look at the longer view, what's happened in the last couple years. And then you, second, you get your fix as to where you are, where you specifically are, the positions that you have, the funds that you hold, the amount of money that you have to invest if you're not fully invested, and you take a look at the charts of the stocks that you're considering and get this whole thing kind of figured out. And along the way, I would say this: avoid the chat rooms like the plague. This, to me, is like investment opium. You go and you read these things that people are talking about. You don't know who they are. A lot of them are uninformed, and some of them are even putting things out there to be the opposite of what they are on purpose. And to me, it's just like sitting down and channel surfing on TV. It just kind of puts your mind into mush. So anybody that wants to really get somewhere, the chat rooms are about the last place in the world you'd ever want to spend any time.
Who's going to give you any valuable information there? They're going to keep it for themselves.
Right, and you don't even know who you're reading. So you get the big picture, you figure where you are in that picture, and then you come up with a plan. And as Pat Gorman would say, you plan your work and figure out what that plan is supposed to look like for you specifically, because we're all a little bit different in terms of our risk tolerance, our emotional considerations, our experience, what we want to accomplish, and the resources we have to do that. So once you've done that, once you've got your plan kind of worked out, and you're looking at specific stocks that you might be interested in, or ones that you have. Do I want to own more? Do I have some dogs to get rid of? And then you start working your plan. And working the plan doesn't mean that you have to start buying something right away, but it means getting really set about what you're going to do when your plan tells you to execute it. And the harder it gets to pull that trigger, so to speak, that buying or selling trigger, the closer you are probably to being right if you've done your work carefully. And I want to recommend one particular interview that took place over the weekend that I hope everyone will listen to. And that was an interview by Jim Sinclair on King World News. And Jim doesn't do very many interviews, and I've always found when he does, I want to sit down and take notes. And I saw that this interview was posted when I was on the other side of the state over the weekend, and coming back, I was able to listen to it on my iPhone with really good reception. I listened to that 4 times on the way back. And each time I listened to it, I picked up something more. Jim is so incredibly good, and sometimes he speaks in metaphor and you don't get exactly what he means right away, but if you think about it, you will. I hope everybody will listen to Jim, because I think he's kind of an open sesame to what we have to look forward to here. And he's not 100% accurate. Nobody is. As Yogi Berra says, it's really difficult to make predictions, especially when you're looking at the future. But the reality is he gets it right more often than he gets it wrong, and he has a tremendous sense for the pulse of the market. And so rather than saying, oh, this is a specific timing issue, but I think it's a specific emotional issue where the market is, and I think he has a lot to give us all in terms of information if we reflect deeply on what he has to say.
Well, you listened to him extensively. What was the main message you got out of it?
The main message is that what we're going through now is really kind of an emotional shakeout, and it's a physical shakeout too, because a lot of people are getting knocked out of the market, and sometimes for different reasons than they think it is. We're hearing all this stuff about the gold bull market is over, and we see Goldman Sachs talking about, $1,200 gold, and then you read more deeply, and you see that they're talking about $1,200 gold in 5 years, this type of a thing. And so the key is to just go ahead and ignore that, because they're often on the opposite side of the trade. And so you turn off that noise, so to speak, and then you keep looking at the plan that you have and decide what it is I want to accomplish, and then go for that, and just ignore that noise. And he puts things in perspective about where we're really going to be headed once this is over, and it may be over sooner than we think, even if we have sideways action after that. But prices are pretty much destined to go much, much higher, because the fundamental underpinnings to the bull market have not changed. In fact, for the most part, they have only intensified, making them even more relevant than they were before.
Now, I have things like the sequestration crisis or the Dow going to a record high. Has that had any impact or influence on precious metal prices?
It has psychologically, because when things are going down, you hear nothing but negative news, and when they're going up, you hear nothing but positive. And so here you have trees growing to the sky with the Dow, and it may go much, much higher. But the point is, it's been rising for 3 years, and now the public has finally caught on. After it's really gone up all this time, they're going to jump in, right? So how much profit is left? Well, there may be a substantial amount left, but there's also a substantial amount of risk. And this is what people have to consider, the risk reward. So now we have price risk. 3 years ago we had information risk. The Dow was at 7,000. Now it's 14,000. And that's quite a bit of profit that you haven't picked up on if you haven't been in the market till just now.
After you pick up on that risk, when do you decide that I've had enough of it and maybe go into something that's less risky?
Well, that's the thing. You sell into great strength, and at some point we're going to have a chance to do that in the precious metals. And I'm hoping that everybody listening will still be around for that, so that when we get into the public mania phase, which is a few years from now most likely, they'll be able to sell into great strength rather than selling out now and kind of getting everything out, throwing the baby out with the bathwater, so to speak, selling the good and the bad stocks. If you have dogs now, which you don't think are going to make it, even if you're way down on that, there's a very good strategy that I used in 2008. I looked at some of the stocks that I had very large percentage losses on, and I didn't think they were going to come back. So I sold them, and I took that relatively small amount of dollar money, and I put it into the strongest stocks that I could find. They were still dropping, but I felt that when things turned around, they would be early movers. And some of those stocks went up 6 or 7 times, so I was able to get back the money I had lost on the dogs, and also it wasn't sitting there going nowhere. And then I was able to bring my account back up, and within 6 or 8 months, I had, restored my losses and had gone on to a new all-time high. And I think we have the same potential here. Whether we're at the bottom now, as some people are saying, or whether we'll have another waterfall decline, what I would call a beaker decline. If you remember these chemistry, in your chemistry classes, when you poured things into a beaker, it went down, straight down, and came back up the other side like a V. We could have something like that. I mean, nobody really knows. But the more we get oversold and the more panic that happens, the more likely we'll see some kind of a beaker-type bottom where even prices may break major trend lines and people will really throw in the towel then, and it could be what's known as a bear trap, where it turns around, reverses, and moves on higher. And those people that have been knocked out will never get back in again.
Is China still a major player? I heard that when the price of gold really started to do this latest little dip, China backed off and stopped buying. So are they just waiting for prices to hit what they think is a very, a new low kind of thing in this new positive market? And is that when they're going to jump in and all of a sudden drive prices right back up? That's a very astute observation. And the thing is, the Chinese are great market players. They don't announce their intentions until after they've already done it. It's like George Soros. He announced he was going to sell some gold. Well, that happened several months ago. And so the Chinese, we can only guess right now, or we can speculate, so to speak, but I think the odds are that they are buying. And the lower the prices drop, the more aggressive they'll be buying. So they're not going to come out and ripple the market, and they're very happy to buy what other people are selling. And so my guess is that they're adding, the same with the Russians and others central banks too, and we'll find out in the passage of time, when and where they've bought, but they're not going to tell us right now.
one of the things that I think is really important for people when they're trying to work their plan, they consider selling their dogs. We talked about that. And then start looking only at quality. Now, here's something else again. We have a tendency to look at the short-term charts, the technical charts. And if you're looking at the daily, you may not see the biggest picture that you want to see. And so what I've done on some of mine, not only where have prices been during the last year or two, I want to know where have they been over the last 3, 5, or 10 years. And if I look back, then I can see levels of where they hit at extremes before, and I ask myself, are we at those extremes yet? And in some cases we're not, even on the good stocks. And on the possibility that we could see a waterfall decline, I want to keep some money in reserve so that if it gets down anywhere near those levels, I can participate as opposed to just buying now because it's cheap, because it could get a lot cheaper. And it may be, we just don't know, but it may be that there's one last waterfall decline ahead of us, whereas if you have even a relatively small amount of money and you put it into the best of breed stocks, you could be very, very happy in a short period of time.
So even now, if you're looking at mining stocks, many of which you said have gone down, take a look at the companies that traditionally have done well. This is a bump in the road for them. They're going to do well in the long term.
Yes, and in some cases a very big bump. But here's the thing. A good general always keeps a strategic reserve. He never commits all of his forces at one time, except in very rare cases. There'll be an opportunity that he feels is outstanding, the risk-reward is really good, and he may commit everything he has in that reserve. But he doesn't do it willy-nilly. And after he's committed that, as soon as he's achieved his objective, he reestablishes the strategic reserve. And I think we can learn a lot from good generals in warfare, because this is what it is for us. It's financial warfare. If you have to make that commitment of your last strategic reserve, make sure it's the point where you feel the market is a maximum stretch from what it should be, and that the rubber band is likely to pull back decisively and quickly. And if you do that, you can do what Rick Rule did. He said, in 1996, I paid more in capital gains tax than my net worth was in 1992. So there are opportunities where we get a chance to do something like this, and we may not be there yet. We could be on the cusp of it. It could have happened yesterday, but it's very possible that it will happen over the next few days and weeks if we just watch. So keeping a little bit ahead for what we call the stupid cheap prices makes a lot of sense. If we don't get there, you've still got a position. If it does, you have the opportunity perhaps to pick up your best company at a fraction of what it traded for a few months ago. We just don't know yet, but I'm waiting eagerly to watch.
Remain alert.
Yes.
My guest has been David Smith. Thank you very much, David. He's the senior analyst for the Morgan Report, which you can find online at silver-investor.com. You're listening to HowStreet.com radio, and you can contact us at info@HowStreet.com. I'm Jim Goddard.